Hey folks, Dan Frio here. Today we're going to talk about a lot of the stuff that I've been saying in regards to home affordability. Why I think home prices are going to start to ease up. The main culprit behind that is the forbearances and the lack of inventory that we had is going to be corrected here soon. Mainstream media is starting to take notice of this. So don't go away. That's what we're going to talk about next. All right, so you guys hear me plead every day about the housing market, why I don't think it's going to crash. Anything can happen. But mainstream media is starting to go on the same thinking I am. A lot of times they're just, I won't say deceptive, I'll just say they only give you part of the truth. I try to say on this channel, we give you the facts. Even if I'm wrong, prove me wrong on any of this stuff, and I'll tuck my tail between my legs, I'll apologize if I miss something, but I try to do as much due diligence on this as I can. So let's get into today's headlines in regards to home prices. And where I expected things to be, I gave you a lot of that detail yesterday, but let's dig into what people are starting to say. So, home prices to drop in late 2022, says Mortgage Bankers Association. So let's dig in on this, okay? It's all going to be related to where housing is going to be in 2022. While the Mortgage Bankers Association foresees the median price of existing home posting a 15.3% year-over-year gain to 362 in the first quarter of 2022, it sees prices beginning to fall as the year progresses. The group expects the median price of existing homes to end 2022 at $352,000. This represents a 2.5% drop in home prices. So the first caption, let's break it down. So should you freak out? Is the housing market going to crash? No, it's starting to stabilize. Okay, they're saying in here by the end of next year they're going to keep continuing to go up, then they're going to start to stabilize. So unless you way overpaid for your home, which I've been pleading you not to do, you're going to be fine. All right, so let's keep continuing down through this article. And then I got another really nice article for you guys. What's going on? A lot of it boils down to inflation, or higher inflation means for the market. All right. The Bankers Association is forecasting that the average 30-year fixed mortgage rate will hit 3.7 by third quarter of 2022 and 4% by the end of 2022. Basically, right in line what I was saying it. I did post one video and the rate said 4.75. If the market was normal and we didn't see the chaos that we saw in the last 2 years, that's basically where mortgage rates would be. So eventually, as the economy recovers, I'm not going to say it's next year, the year after, that's where we're going to get to, guys. Okay, you could say he's fear mongering or whatever. Just watch. If you go back to the past year, my videos, I've nailed almost every one of these. That's kudos, but it's, again, I'm trying to post facts to you guys. And my knowledge of 30 years in this business, it's cyclical. I can see a lot of this stuff coming. All right, so now let's get on to more pieces of this puzzle. Zillow research is predicting a 13.6% growth in the U.S. housing prices over the coming 12 months. Meanwhile, Fannie Mae is predicting 7.9, and CoreLogic is at a 1.9 number. Well, Zillow's at 13, CoreLogic is at 1.9. Maybe that's why Zillow is basically just almost went kaput because of the home buying that they did. If we saw this aggressive numbers, I don't think Zillow would be selling all these houses at a discount. So just think of that part of it. All right, so here's the one part that really is tying in with what I've been pleading to you guys for the last 6 months to a year. A surge in the U.S. affordable housing supply is coming from people who can't afford their homes. So who are those people? Well, let's go down through the article. More low-priced homes were up for sale in the third quarter of 2021 than any other segment, according to the latest housing report from Redfin. Houses in the most affordable tier, which represents home prices below 95% of the others on the market, rose by 13% compared to the year prior. So here's affordable homes, I'll put it that way. Luxury homes, the supply is going way down. Affordable homes, most affordable homes, they're skyrocketing, okay? Why? Cheaper homes are hitting the market. People who no longer can afford their payments put their houses up on the market. Why is that? Well, the emergency federal mortgage forbearance policy allowed those affected by the pandemic to temporarily pause mortgage payments. Once it ended this October, more people will be forced to sell. This contributes to the total 78,000 affordable homes on the market in the third quarter, a continued increase in supply that began in the second quarter of 2021. All right, so what I've been saying all along is houses aren't going to crash. We're going to see more supply. Mortgage rates are going to go up. They're not going to go crazy. All of this was just tied in together into a nice little bow of what I've been saying for the last year. So these posts have just come out this week. So finally, mainstream media is getting on board. You guys are way step ahead of all this. So I continue to get emails from people. Dan, should we buy now? Should we do this? Here's what I would do. If I'm looking to buy, I start looking. I'm not going to overpay. I'm not going to get forced into bidding wars. I'm going to go out there and just find the house that I really like. Here's the backdrop of this. In about 2 weeks, we see Thanksgiving. From Thanksgiving to middle of January, most people aren't going to do anything. So you might be out there with a limited amount of people looking at homes. Now you have the people that came out of the forbearance that they're going to say, you know what, I'm just going to put my house on the market, because they might be able to work with their mortgage company saying, the house is on the market. Can I continue my forbearance while I wait for my house to sell? The lenders might come back and say yes. But if you're in a forbearance and you're not looking to sell and you just need some advice, please give us a call. I'll give you all that information at the end. So then what I would progress is, I think next spring we're going to have a huge market. Why? We're going to have a lot more houses in the market, a lot less sellers. We have companies like Zillow out of the market, and I still see a lot of the big hedge funds and everybody they're going to start to dissipate out of the market because if Zillow couldn't do it, and they're basically a real estate platform, and it's going to be hard for individuals to do it. So they might not want to take that much risk for the reward. Okay. And then they can also say, well, houses that are at their peak now, they're going to start to stabilize. That might be another reason why you have a lot of these hedge funds not moving into that market. So we're going to have more houses on the market on these articles here that back up what I said. And we're going to have fewer buyers. Even if we're not fewer buyers, at least we have more supply in the market that'll bring the prices back to equilibrium. So if you like my videos, please, all I ask you to do is give me a thumbs up, subscribe down below, hit the bell. Every time I post a video, you get an alert. And how do you reach out to me if you need some assistance? Well, the best way to do that is go to therateupdate.com. It's going to take you right here. You can do several things. If you want to call, give me a call at 844-775-LOAN, right here at the top right. A lot of people like to schedule an appointment. They're like, okay, and I like this because I can figure out what are you looking to do? Because many times you just do an online application, you're just plugging in some stuff. I don't know the nitty gritty in the background. You might be moving to another state. You might be past due on a mortgage. Your credit scores might be too low. Something that just might prohibit you. So we'd love to talk to you. How you do that is just click up here, the orange tab, schedule a meeting. Or if you're like, I just want to get this going, you can hit the Apply Now button. It's our state-of-the-art online application. As soon as you complete that application, I'll get an alert so I can jump in and look at your file, pull your credit, get out to you, reach out to you, and go through any questions you have and get you on your way there. If you're in the mortgage process right now, what I have people doing is they're on the screen, they're going to the top right, the resource section, and you can see down here it says upload loan estimate. What is your loan estimate? Well, if you applied for a mortgage, within 3 days of pulling your credit, your lender has to issue you a loan estimate. And on that loan estimate, it's going to give your name, the date, the address of the property, the rate that they're giving you, what kind of loan it is, conventional, FHA, VA, are you looking to buy, purchase, refinance? It'll give me all that information. And then it'll really dig down on the numbers. It's basically representing every interest rate, every APR, and where every penny in fees goes to. I'm going to review that for you to see if there's a better opportunity in the market for you guys to get either a better rate, lower fees, or all the above, a better rate and fees. So that's how you do it. So I hope you like my video. If you do, again, don't forget to give us a thumbs up. Subscribe down below. I'd love to hit 20,000 subscribers by the end of the year. Only you guys can help me do that. So God bless, guys. Thanks so much for watching, and I'll see you tomorrow. Bye-bye.